What if a conflict thousands of miles away could suddenly make your gas more expensive, raise the price of groceries, hurt your retirement account, and even slow down the global economy? Right now, millions of Americans are watching headlines about rising tensions between Iran and the United States. At first glance, it might seem like just another conflict happening overseas. But history has shown that when tensions rise in the Middle East, the effects rarely stay there. And this time, the stakes may be bigger than many people realize. Because this isn't only about missiles, military operations, or political disagreements. It's about oil, it's about global trade, and it's about a narrow stretch of water that quietly powers much of the modern world. Before we continue, make sure you subscribe to Hidden Life Hacks and turn on notifications. We break down the world's biggest events in simple language so you can understand what they really mean for your daily life. And trust me, by the end of this video, you'll understand why millions of people around the world are closely watching what happens next. Imagine waking up tomorrow and seeing gas prices suddenly jump, not because of something happening in your city, not because of a storm, but because of events taking place nearly 7,000 miles away. That is exactly why investors, governments, and energy companies are paying attention to the growing tensions between Iran and the United States. The center of the story is a place called the Strait of Hormuz. Most Americans have never been there. Many have never even heard of it. Yet this narrow waterway is one of the most important locations on Earth. A massive portion of the world's oil passes through this route every single day. Experts estimate that around 1/5 of global oil supplies normally move through this area. Think about that for a moment. One small waterway, one critical choke point, and a huge share of the energy that powers cars, trucks, airplanes, factories, and entire economies. When military tensions rise around this region, markets immediately become nervous. Not because oil has already disappeared, but because traders fear it could. And in financial markets, fear alone can move prices. Recent reports show that hostilities in the region have already pushed oil prices higher and increased concerns about shipping disruptions. Now, here's where things become even more interesting. Many people assume that because America produces a lot of its own oil, the United States would be protected from these events. But that's only partially true. Oil is part of a global market. When prices rise internationally, Americans often feel the impact too, even if the oil isn't coming directly from the Middle East. Experts have noted that disruptions around the Strait of Hormuz can contribute to higher gasoline prices for American consumers because global energy prices influence everyone, and higher energy prices don't stop at the gas station. They spread. Trucking companies pay more, airlines pay more, shipping companies pay more, factories pay more, and eventually consumers pay more. That means everyday items, from food to electronics, can become more expensive. This is why economists worry about inflation whenever energy markets are shaken by geopolitical conflicts. But oil is only the beginning. The second effect is global trade. Many people don't realize how interconnected modern supply chains have become. A product assembled in one country may contain parts from 5 different countries. Raw materials may travel across oceans before reaching factories. Finished products may cross multiple borders before arriving in stores. When major shipping routes become risky, transportation costs can surge. Some vessels may choose longer routes, others may delay shipments. Insurance costs can rise dramatically. Recent reports indicate that many tanker operators have become increasingly cautious due to security concerns and rising insurance expenses. And every delay creates a chain reaction. A delayed shipment can slow manufacturing. Slower manufacturing can reduce supply. Reduced supply can increase prices. And suddenly, a conflict that seems distant begins affecting families around the world. Now here's a question many viewers may be asking. Could this trigger a recession? The honest answer is that nobody knows. But economists understand that major energy shocks have historically created pressure on economic growth. Businesses become cautious. Consumers spend less, investment slows, and uncertainty spreads throughout financial markets. Even the possibility of prolonged instability can make investors nervous. That's because markets dislike uncertainty more than almost anything else. When investors don't know what comes next, many choose to reduce risk. And that can create volatility across stocks, commodities, and currencies. But there is another side to this story that most headlines don't discuss. Sometimes the greatest economic damage doesn't come from what actually happens. It comes from what people fear might happen. Think about it. A rumor can move markets. A threat can move markets. A warning can move markets. And when the world's energy supply is involved, those reactions become even stronger. That's why every statement from political leaders, military officials, and diplomats is being analyzed so carefully right now. Because a single announcement can send prices rising or falling within minutes. And this brings us to perhaps the most important question of all. What happens next? Will tensions cool down? Will diplomacy succeed? Or could the situation become even more serious? At this moment, nobody can answer that with certainty. But one thing is clear. The outcome won't only affect the Middle East, it could affect drivers in Texas, families in California, businesses in New York, and consumers around the world. Because in today's interconnected economy, events in one region can quickly become everyone's problem. And that's exactly why the world is watching so closely. Before we continue to the next part, I want to hear your opinion. Do you think this crisis will calm down in the coming weeks, or do you believe the economic impact is only beginning? Leave your thoughts in the comments below. And if you've learned something new so far, hit the like button and subscribe to Hidden Life Hacks. In the next part, we're going to look at the worst case scenario experts fear, how oil prices could affect ordinary American families, and why some analysts believe the global economy may face challenges even if the fighting never becomes a full-scale war. Stay with us, because the next part may completely change how you view this crisis. Many analysts believe the most dangerous part of this crisis is not what has already happened. It's what could happen next. Because when people hear the words Middle East conflict, many immediately think about oil prices. But the real story may be much bigger. Imagine a situation where tensions continue for weeks or even months. Shipping companies become increasingly cautious. Insurance costs keep rising. Businesses delay investments. Consumers become worried about inflation returning. At first, none of these developments seem dramatic on their own, but together they can create a powerful economic chain reaction. And that's exactly what concerns economists. Think about the average American family. Most people don't buy barrels of oil. Most people don't track shipping routes. Most people don't watch commodity markets every day. But they do buy groceries. They do fill their cars with gas. They do pay utility bills. And they definitely notice when prices start climbing. This is where the effects become personal. A few extra dollars at the gas station may not seem like much. But what happens when transportation costs increase across the entire economy? The truck delivering food to your local supermarket pays more. The company transporting products across the country pays more. The airline moving cargo pays more. And eventually, those costs often find their way to consumers. Suddenly, a family budget that was already under pressure becomes even tighter. This is why energy prices are often called the hidden tax on the economy. Nobody votes for them, nobody plans for them, but everyone feels them. And here's something even more interesting. The impact doesn't stop with consumers. Businesses face difficult decisions too. Imagine you're running a small company. Your transportation expenses rise, your supplier raises prices, your customers are spending less because they're worried about inflation. Now you're caught in the middle. Do you absorb the higher costs and earn less profit, or do you raise prices and risk losing customers? Millions of businesses around the world face these kinds of decisions whenever major economic uncertainty appears. And uncertainty may be the most important word in this entire story, because markets can handle good news. Markets can handle bad news. What markets struggle with is not knowing what comes next. That's why investors closely monitor every statement coming from Washington, Tehran, and other world capitals. A single headline can change expectations in seconds. One announcement can push oil prices higher, another can send them lower. Behind every market movement are real people trying to understand what the future might look like. Now let's talk about something that rarely gets enough attention: the psychological impact. Fear is incredibly powerful. When people become uncertain about the future, their behavior changes. Consumers may postpone large purchases, businesses may delay hiring, investors may move money into safer assets, banks may become more cautious. None of these actions sound dramatic. But when millions of people make similar decisions at the same time, the effects can ripple throughout the economy. History has shown that confidence plays a major role in economic growth. When people feel secure, they spend. When businesses feel optimistic, they invest. When investors believe the future looks stable, they take risks. But when uncertainty dominates the headlines, confidence can weaken surprisingly fast. And that may be one of the biggest risks associated with prolonged geopolitical tensions. Now here's a question worth asking. Could America benefit in some ways from higher oil prices? The answer is more complicated than many people realize. The United States is one of the world's largest energy producers. Higher prices can sometimes help certain energy companies in regions that depend on oil production. Some businesses may see increased profits. Some workers may benefit from stronger energy sector activity. But those benefits often come with trade-offs, because higher energy prices can still create challenges for consumers and other industries. In other words, there are usually winners and losers. And the overall impact depends on how long the situation lasts and how severe it becomes. This is why experts avoid making simple predictions. The global economy is incredibly complex. One development creates another. One reaction triggers the next, and outcomes rarely unfold exactly as expected. Now, let's consider the scenario that many analysts hope to avoid. A prolonged period of instability, not necessarily a major war, not necessarily a complete disruption of global trade, just enough uncertainty to keep businesses, investors, and consumers nervous for an extended period. That alone could have meaningful economic consequences. Growth could slow, investment could weaken, consumer confidence could decline, and financial markets could remain volatile. Again, none of this is guaranteed. But these are the risks experts are watching closely. And perhaps the biggest lesson from all of this is how connected our world has become. A decision made in one country can affect families thousands of miles away. A shipping route in one region can influence prices on another continent. A conflict that seems distant can eventually reach people through higher costs, slower growth, or market uncertainty. That's the reality of the modern global economy. Whether we like it or not, we're all connected. And that's why events in the Middle East continue to attract so much attention around the world. But here's the part that many people miss. Crises often reveal important truths. They remind us how fragile supply chains can be. They expose economic weaknesses, they show which industries are prepared and which are vulnerable, and they force governments, businesses, and individuals to think differently about the future. The coming weeks may be critical. Diplomatic efforts could reduce tensions, markets could stabilize, energy prices could calm down, or the opposite could happen. Right now, nobody knows. And that's exactly why millions of people are watching every development so closely. If you've stayed with us until this point, you're already ahead of most people because you're looking beyond the headlines and trying to understand the bigger picture. So now I want to hear from you. What do you think happens next? Will tensions ease and markets recover? Or are we only seeing the beginning of a much larger economic story? Share your opinion in the comments below because some of the most interesting discussions happen there. And if you enjoy content that explains major world events in simple, easy to understand language, make sure you subscribe to Hidden Life Hacks and turn on notifications. We have another eye-opening video coming soon that explores a hidden global risk most people have never heard of. But it could affect the economy, energy prices, and everyday life in ways that may surprise you. You won't want to miss that one. Until next time, stay informed, stay curious, and remember that understanding the world is often the first step toward preparing for it.